Good evening, everyone. So it's now 6:04. We will just wait for a few more minutes before we start today's lecture. This is our week 4 lecture, and we will be focusing on the balance sheet. So we're just waiting for some more students to join, and then we will start in about 2 minutes. Good evening, everyone. So we are in the proper time to start our lecture for week 4. So before we start week 4, we'd like to recall some of the concepts that we have discussed last week about financial statements. So the entire topic from week 3 up to week 6 will be focusing on the financial statements. We said that the financial statements, they are the end result or the product of financial accounting. You remember during the week 1 discussion, we said the general purpose financial statements that are prepared by financial accounting is primarily communicated through the financial statements. So when we say financial statements, they are prepared periodically, meaning there is a time period that we have designated for the preparation of the financial statements. Normal company have annual financial statements. That means at the end of their accounting period, for example, December 31st, which is the last day of the last day of the year, then they prepare the financial statement. It's like the cut-off of the financial statement. And of course, this periodic period can be less than 1 year. In some companies, especially if they are publicly listed companies, they report financial statements or they are required by the stock exchanges or government agencies to submit financial statements on a quarterly basis. However, there are still some companies, especially the big companies, they prepare financial statements on a monthly basis because management would like to know what happened for the past 30 days. So, without the accounting information embodied in the financial statements, the users may not arrive at a sound financial decision. So, when we say uh, accounting helps in the decision making, we are primarily focusing on the financial statement. So, what is the objective of the financial statements? We said these are the information on the financial position, which is represented by the balance sheet, the financial performance, which is primarily represented by the income statement, and also what is the cash position or the cash flow of the entity, which we are focusing on the statement of cash flows. So if we are going to recall the previous discussion, we said these financial statements are interrelated with each other. Why? Because income statement, the bottom line or the end number, which is either a net income or a net loss, goes to the statement of changes in equity or the owner's equity. And it also goes to the balance sheet as forming part of the equity portion. And again, for example, the statement of cash flows, the final number, which is the ending cash balance, goes also to the balance sheet. So the different component of the financial statements can be found in other parts of the financial statements. So last time we focused on the income statement. So when we say income statement, what is the primary focus of this? The performance of the company. What happens to the time period that is being measured? Did the company incur net income or net loss? Uh, Ms. Flores, good evening to you. So I'm just making a review of what lecture, which is week 3. Okay. So we said the income statement shows the performance of the company. What happens? What happens to the revenue? What happens to the expenses? So when you're asked, where can you find the revenue information, the expenses information, then you will be focusing on the financial statement. Of course, we just total all the income and then total all the expenses and then subtract it the subtract the expenses from the income, and then you have either a net income or a net loss. Of course, you have to pay taxes. So before you arrive at the final net income, you will have to pay taxes to the government. Later, I will show you an actual income statement so that you know or you have a visualization of what we are talking about. So um, probably I'll share that information. Okay, let me just pull up my screen and then show you this information. Okay, just give me a second. Let me just pull up that file. I've actually downloaded an actual financial statement of one of the largest energy company in the Philippines. By the way, if you want to see an actual financial statement, you can you can go to the company's website. So in my case, I was looking at the income statement of Energy Development Corporation. So I just typed in Google Energy Development Corporation, and then I was directed to their website. Okay. So let me just show you an example of an actual financial statement, specifically the income statement of Energy Development Corporation. Okay. Ms. Flores, are you seeing my screen right now? I'm showing the statements of income or the income statement of Energy Development Corporation. So again, if you want to uh, download or study further an actual financial statements, all you have to do is think of a company and then type in there in Google the name of the company, and you will be directed to their website. Especially for the corporations, they have available income statement. Okay. So, okay, so si Jonalyn said that she was able to see my screen. Okay, so look at this. Okay, so there's the name of the financial statement, statements of income, and then what did I told you in my previous lecture? You will find the revenues, the expenses of the company. So in this case, since Energy Development Corporation is engaged in the sale of electricity, their revenue is primarily sale of electricity. And then, of course, there are attendant costs in producing the electricity. So that is the cost of sale of electricity. My research on EDC uh, tells me that their uh, cost or their sources of energy are renewables. Okay, so they're renewable energy company. Okay, so you have there, for example, if you look at September 2021, which is the second column here, so these are in millions. Okay, so it's about 31.5 billion pesos sales. Okay, but out of that, they have a cost of sale of about 17.8 billion, and you have the general and administrative expenses. So again, when you say cost of sales, this is directly related to the revenue, to the product that they are selling. So since this is electricity, this cost of sale is probably their cost of generation of, for example, geothermal energy or wind energy. So that's the total here of 17.8 billion. And then you have your general and administrative expenses. These are not directly related to the producing the power or the energy, but this may be the depreciation of their building, the salaries of the employees, okay, uh, and other expenses not directly related to the production of electricity. So it's about 4.1 billion pesos. And then you have the financial income and expenses. So what are these? These are the other revenues or other expenses of the company. So here we have a detail here. So uh, bulk of their financial income are interest expenses. So meaning this company, Energy Development Corporation, is actually borrowing money, okay, from the banks. Okay, so these are the interest expenses. Of course, they also have their interest income. So probably this company is also investing their idle cash, for example, in interest generating investments. Okay, and then you have there another. So these are all related to financial instruments. Okay, so financial income. And then you have your other income and charges, which is foreign exchange. So they have foreign exchange gain or loss. So when you say foreign exchanges, for example, some of their loans are probably denominated in other currencies other than Philippine currency. Of course, there are changes in the amount of or the exchange rate, okay, as of a particular period of time. Okay, and then you have your income from insurance claims. So probably one of their power plant uh, broke down and there are insurance coverage. Okay, so you have their income before income tax. Okay, so is this the final income already? What do you think, Janeline? Is this the final income already, which will now be your net income? What do you think? Okay, let me just look at the chat. Okay, very good, Janeline. No, you remember in my lecture, there is still the taxes that you have to pay. So here, there is a computation of the taxes. So a total tax of 1,080,000,000. So after that, then you have your final net income. So what can you say? The company performed during the year. So what is their performance? They generated a net income of 7.4 billion pesos. That's why when we say income statement, we will know the performance of the company. So if you compare that with their performance for last year, same period, it's almost identical. So last year, September 2020, their net income is about 7.4 billion pesos. Okay, I don't know what's the conversion to, for example, Malaysian ringgit or Indonesian rupiah, but this is in Philippine peso. So it's almost identical. Okay, so that is the sample of an actual financial statement. So again, when we say financial statements, we will see the revenues, okay, directly related to the operations, and also other revenues, which may be related to financing or other income of the company. And then you have also the expenses, which can be broken down into the cost of sales. What is cost of sales again? These are now the expense or the attendant cost related to the production of the main product. And then you have your other expenses. And of course, do not forget about taxes. Do not forget about government. Okay, so when there is taxable income, meaning there is the total revenues is more than the total costs and expenses, then you have taxable income. Okay, so let me now go to our discussion on um, by the way, are there any questions on income statement? Um, you have sample problems that you have to solve in your exams or probably in your activity if you choose the activity mode. Okay, so let me now share screen. Okay, okay. Wait. Let me just do it again. I wanted to show the PowerPoint of this. Okay. 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 So let me just fix my position inside the PowerPoint. Okay. So we will now be discussing about the balance sheet. Okay. So which is the second financial statement. You recall during our previous discussion, we said uh, you show the performance, okay, the actual performance of the company by looking at the income statement. Now, what about the balance sheet? What is the importance of this financial statement? Okay, so first we discuss what can you find in the balance sheet. Uh, it's actually the accounting equation. You remember the accounting equation, our topic for week number 2, the assets, the liabilities, and the owner's equity. This is precisely what the items or the components that you can find in the balance sheet. So when you say resources that the entity own, these are the assets, meaning these are controlled by the company and then it has future benefits. So those are the assets of the company. And then you have the obligations that the entity owes. Okay, so these are the payables of the corporation or the company. So these are on the other side of the accounting equation. You remember, asset is on the left side, and then liability is in the right side. Okay, and then what is the other component that you can find in the balance sheet? Okay, residual interest in the net asset, which is essentially your owner's equity. Again, let me just give a quick test. Okay, true or false? Assets can be located or filed. You can find assets in the income statement. What do you think is the answer? Can you find assets in the income statement? You can either answer or you can either chat your answer. Okay. Okay. Assets. Okay. So assets. Where can you find assets? Is it in the income statement or balance sheet? Let me just clarify the answer. Oh, very good, Janalina. It's in the uh, balance sheet. Okay. True or false again? Okay. Information on owner's equity can be located or found in the balance sheet. Owner's equity. True or false? It's a statement true or false? Yes, exactly. Very good, Janalyn. Okay. So I think that's clear already. So let me just go to the next slide. Okay. Now, what is the usefulness of the balance sheet? Later, we will be looking at a video that discusses about this. But these are some of the usefulness of the balance sheet. Please take note of this as this is one of the open questions Okay, so how is balance sheet useful to the users? Okay, look at this. It facilitates analysis of the company's ability to, one, meet short-term obligations. Okay, so what does that mean? For example, you are a supplier. So you are supplying the raw materials for the company. In our previous example, we said mask. Okay, so for example, you are supplying the raw materials for the mask for, let's say, ABC company. Okay, so you look at their asset portion. Okay, so you see there they have enough cash to service your obligation. So the amount that you deliver to the company. So what does that mean to you as a supplier? It gives you what? Are you confident are you confident that you will be paid? If you look at when you look at the asset section, specifically cash, and they have ample cash, they have sufficient cash, would that give you some confidence? Of course, yes. So that is uh, that is one of the usefulness. No, it facilitates analysis of the company's ability to meet short-term obligation. But let's say when you look at the cash uh, portion of the balance sheet, there's very little cash and very large amount of obligation. Okay, so Jonalyn, what do you think? If that is the scenario, very little cash and large uh, liabilities, short-term liabilities, would you have the confidence to deliver your raw materials and then expect that you will be gonna the company will pay you? What do you think compared to the previous illustration? No, very good, Jonalyn. Okay, so you see the usefulness of the balance sheet. So this is one uh, area where you can look at the answer if you're going to be paid. Okay, of course, there's a lot of factor. Okay, but one of the factors that you have to consider is that it has the ability to pay based on its cash resources. And then look at this: pay all debts as due. Pay all debts as due. So when you see that they are able to pay all uh, all debts. Okay, so when you say all debts, it's not only the short-term debt, but also the long-term debt of the company. Long-term debt. So for example, uh, the company came to you. Okay, came to you. You are a bank, for example. Let's say you are Metro Bank. Okay, and then the company is borrowing a 5-year term loan. Okay, so again, you will be able to determine if the company's ability to pay. So for example, it's an amortizing loan, meaning there's a principal component as well as interest component. Okay. So for example, upon study of the cash position of the company, okay, let's say the amount being borrowed is 10 million pesos. Okay, so it's a 5-year term loan of 10 million pesos. Okay, so uh, you look at the cash portion and you see there uh, the company can repay the loan in 3 years, okay, and not 5 years. So that is the what information that you have to tell the borrower. Oh, you don't need 5 years to pay this loan. Why? Oh, look at your cash. Okay, you can sufficiently service the cash in a period of 3 years and not 5 years. Okay, so the company will now see, oh, we don't need 5 years. We only need 2 years. So that's one of the usefulness of the balance sheet. And then provides information about the company's financial flexibility. In your future courses, you will see their matching of, for example, the tenors of obligations. Okay, so for example, you normally match short-term uh, uses with short-term loans. Okay, and then long-term loans with long-term assets. For example, Jonalyn, for example, you're going to construct a warehouse. Okay, of course, constructing a warehouse uh, will entail several months, probably years. Okay, so again, uh, what will be the tenor or the length of the loan? Of course, it cannot be short term because you will not be able to generate enough revenues to pay for the loan. So there's some flexibility. So where is that flexibility coming from? You look at again the current assets of the company. Okay. So do you have any questions about this one? Uh, this focuses on the repayment capacity of the company. Okay. So look at this. Again, we said probable future economic benefit. Okay, probable. If there is no more economic benefit, meaning you've already uh, received the benefit, then it's not an asset anymore. It's an expense already. Okay, so for example, you pay for electricity, okay, and then of course you've already received the benefit of the electricity. Then that's not an asset anymore. Okay. 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 So look at this statement. The primary purpose of the balance sheet is to help forecast the future. Okay. How? Let's think about that. How can the balance sheet help forecast the future? Okay. Help forecast the future. So for example, let's take a look again. One of the component of the balance sheet, cash. Okay. So that's the focus of our discussion. Okay. Now, if the company has sufficient cash to service its uh, operations as well as its loans, its payables, then the company will be able to think of investment opportunities in the future. So they have enough money to cover for their operations, enough money to cover for their repayment of loan. So what do they do with the excess money? Then you can go investment. This is also similar to individuals like us. If we have more cash, more revenues than what we can spend, what happens? Then we begin to think, oh, I will buy this investment. I will buy this property. I will buy this asset. Okay, so it's similar to us. Okay, so that is just one example. Of course, you can think of many more example as you look at the different component of the balance sheet. Okay, so look at this. We've discussed some of this, the typical items that you can find in the balance sheet. So you have your cash, of course, that is it's either in Philippine peso or in Mexican peso, for example, or US dollar. And then you have your accounts receivable. Okay, so when you sell your goods to your customers, they would probably, especially your regular customers, they will probably ask for credit terms. Okay, so they don't pay immediately. So, for example, you supply to SM, okay, SM supermarket. Okay, so you supply, let's say, vegetables to them. Of course, SM will not pay you immediately when you deliver the vegetables. No, SM will ask for credit terms 60 days upon delivery. So meantime, while you're waiting for the lapsing of the 60 days, then you have accounts receivable. Okay. Of course, you also have your fixed assets. Okay. So these are your land. For example, you're a manufacturing company. Then you have your own manufacturing plant. Okay. So you probably own the land and you'll probably own the building and the equipment. So those are typical balance sheets. So let's say in the mass making corporation that we are discussing, so the warehouse itself where you find all the equipments, that's an asset of the company. Again, why is it an asset of the company? Because it has future benefits. Okay, so those warehouse where you produce your mask, okay, you are expecting that you will use it for the foreseeable future. Of course, buildings, it takes some time before it becomes dilapidated. No? So you can use this building for an extended period of time. Okay, so now let's focus on the liability. Okay, look at the liability. It says probable future sacrifice of economic benefit arising from a present obligation of a particular entity. So what does that mean? Because you receive something. So, for example, in the case of our supplier, because the supplier gave us the raw materials, what happens? The suppliers expects to be prepaid in the future. So you have your sacrifice of economic benefit. What is that? Your cash. So when, for example, when the supplier delivers the raw materials and your payment term is 30 days after, okay? So what happens? After 30 days, you need to write a check, okay? Or you probably need to transfer payment, okay? So what is that? You sacrifice something of economic importance, and that is your cash, okay? So that is a sample of a liability, okay? But please look at this. Uh, this obligation includes legal, moral, social, and implied commitments. Okay. So, but in our case, in financial information, uh, we probably would focus on the legal obligation, meaning there is a contractual agreement between two parties. In our case, the company that is receiving the raw materials and the supplier that is delivering the raw materials. Okay, so any questions so far on the assets and liabilities? This is just a refresher of the concept that we discussed on the accounting equation. Okay, so these are the typical liabilities. Accounts payable, notes, the difference between accounts payable and notes payable is essentially there is a promissory note. Okay, so there is a written promissory note, very detailed information, legalese information. Okay, but if it's just covered by just invoices, okay, or delivery reports, okay, that is typically accounts payable. But when you're covered with an agreement, okay, that is the notes payable. An example of notes payable is when you borrow from the bank. Okay, I don't know, Miss Flores, if you have borrowed from the bank, for example, car loan or housing loan. Uh, what happens is that the bank officer will ask you to pay to sign, okay, a promissory note. And then when you look at the promissory note, it's a fine print document, okay, very small letters, okay, very small font size, and then the manager will say, just sign here, sign here. Okay, so that is a typical notes agreement, okay? And then advances from customers, okay? So, for example, your this is the other way around, okay? So your customer is asking you for an advance, okay? Okay, advances from customers. Or sorry, advances from customers, meaning the one that you're selling, okay, you made advances. Okay, okay, so that's an example of typical liabilities. Okay, so what happens if, for example, um, later I will show you when do you classify this as current and non-current. Okay, so let's park that for the moment. Okay, so again, you, when you see this information, you are reminded of what? What do you think, Miss Flores? Look at this, okay? What are you reminded of? This is one of our topic before in week number 2. Okay, what was our topic in week number 2? It's the okay financial statement. That's correct. Okay, but prior to the financial statements, we discussed about the, you recall that? Accounting equation. Very good, exactly. Okay. So look at this left side, right side. What can you find in the, what can you see in the left side? The assets. Please take note, there's current assets, non-current assets, liabilities, current liabilities, non-current liabilities. Okay, so both assets and liabilities have their current and non-current portion. You uh, probably is asking right now, what makes an asset current? What makes an asset non-current? What makes a liability current? What makes a liability non-current? Okay, so think about that, and in the later slide, we will have that. And then on the equity portion, you have here the contributed capital. Okay, contributed capital. These are the actual investments of the owners. Again, just a note here, when you say contributed capital, this comprises the initial investment and the additional investment. Okay, as the life of the corporation or the company progresses. Of course, there's also withdrawal. So if there's withdrawal, you reduce the amount of the contributed capital. And then there's another item there, retained earnings. You remember when we were discussing in week 2 about the accounting equation, we said the equity portion or the owner's equity portion is further expanded. Okay, it's further expanded into the revenues and expenses, and then you have your net income. Now, what is retained earnings? Of course, the company is expected to operate on a year continuously. Okay, so as they continuously operate, not all earnings are distributed to the owners. Okay, okay, probably majority of the income is retained by the corporation, meaning it's not distributed to the owner but reinvested. An example of this is, for example, um, when you receive your salary, you receive your salary from the office. Okay, so for example, you have expenses of 100,000, but your net income is 200,000. So what happens? There's excess, right? What do you do? Probably the excess of 100,000, you said, okay, I will further use this in my travel. Okay, so that is still expenses. But the other 50,000, what happens? I will retain it for future investments. Okay, or I will invest this. Okay, so that's an example of retained earnings. So the corporation, because it's anticipating further investment opportunities, expansion, for example, or additional line of business, then it is not distributing the income to the owners. Okay, so they are retaining portion of this. So that's the retained earning. Okay, so again, this is a very important takeaway for us. No? Okay, how to classify items on the balance sheet. Please take note of this. This will be probably part of your open class question. Okay, look at this. To determine whether it's current or non-current, okay, simple determination or simple rule. Current, if it is, for example, if it is a asset, okay, the benefit is less than 1 year. Okay? Okay. But if the benefit is more than 1 year, then it's non-current asset. For example, can you think of an asset? Okay, you recall the asset that we discussed. We said cash. Okay, then you have supplies, you have receivables, you have land. Okay, inventories. Okay, what do you think? For example, inventory. Do you expect the benefit from the inventory less than 1 year or more than 1 year? What do you think? More than 1 year. Okay. Let's analyze that again, Miss Flores. For example, let's say your inventory is mask again. Okay, so let's use that mask. Of course, the mask can last for more than 1 year. But what do you think? Do you want the mask to be sold in less than 1 year, or you want the mask to be there in your warehouse for a year or more than 1 year? What do you think? Okay, very good. So you want your inventory as much as possible. Okay, produce then sell, produce and sell, produce and sell, produce and sell. Uh, so meaning you want it to be gone, okay, sold, okay, in less than 1 year, and then you produce again. Okay. So what do you think? Inventory. Is it current or non-current asset? Is it current asset or not? Correct. It's current asset. Let's take a look at another example. Building. Okay, building. We said it's an asset if we have or we expect to have a benefit for more than 1 year. Okay? Now, let's focus on the building. What do you think? If you are the company, what do you expect? How long do you expect to use the building? Less than 1 year or more than 1 year? What do you think? You can chat the answer. Of course, more than 1 year. It doesn't make sense that after erecting the building, after using it less than 1 year, you will tear down the building and uh, construct again another building. You don't do that. Okay, you use the building, let's say, over the estimated life. For example, normally buildings probably can last more than 20 years, right? Depending on the construction of the building. So, if it's expected to have benefits for the next 20 years, then what can we say? It's non-current assets. Okay? Okay. Um, and then let's go to the liability. Supplier's credit. Okay? So your supplier. What do you think? Does your supplier wants to be paid in less than 1 year or more than 1 year? Let's say in our previous example, you're supplying, you are, for example, SM departments, supermarket, SM supermarket. And then one of your supplier delivers vegetable. Now, that supplier of vegetable, what do you think? Does that supplier expect to be paid less than 1 year or more than 1 year? What do you think? Of course, less than 1 year. If you pay more than 1 year, the supplier will probably not give you any vegetables anymore, right? Okay, so since accounts payable, excuse me, uh, you expect that to be paid in less than 1 year, is it current or non-current asset? What do you think? Current or non-current asset? The accounts payable, current assets. Very good. So you see now the difference. Okay. Now let's again examine another liability. Okay. Remember the building. Okay. So you said we said you will construct a building, and then you loan this from the bank. Okay. You loan this from the bank. Now, realistically, how long will you pay the loan for the construction of the building? Will you pay it for less than 1 year or more than 1 year? Of course, more than 1 year. That's right, Jonalyn, no? Because if you pay immediately, let's say 1 year, less than 1 year, the building probably is not yet constructed. It has not yet generated any income. So how can you pay? So in that case, it's a long-term liability or non-current liability. So do you see the difference now? How do you classify the balance sheet? Okay, the items in the balance sheet based on current and non-current liability. Okay, now okay, so these are some of the examples. Okay, now I just like to highlight this, the normal operating cycle. You probably thought about this. Why 1 year? Okay, because normally that's the normal operating cycle. Let's look at some. This is the operating cycle. Okay, so look at this. Study this figure. This is a description of the operating cycle. I'll give you 30 seconds to take a look at this uh, uh, visual representation of the operating cycle. Okay, look at this. Look at this operating cycle. This is the normal operating cycle of a company. So the cash, which is normally the investment coming from the owners or probably the loan coming from the creditors. Okay, you purchase your raw materials. Okay, so you purchase your raw materials, and then you transform the raw materials into inventories. Excuse me. So depending on the manufacturing, the length of time, okay, in producing the inventory. Give it just a second. Okay, so depending on the length of time of manufacturing the inventory, you sell the inventory. Okay, so you remember our customers, they will not pay immediately or cash. They will not pay on cash on delivery. They probably would be asking for a term. So there is receivables. Okay, so receivables, and of course we expect them to pay. So we collect the receivables and then turn into cash again. Now this cycle, okay, which will be done over and over in a period of 1 year, is what you call operating cycle. Okay, so normally this is for a 1 year period of time. Okay, of course, if your operating cycle is more than 1 year, it's rather the exception rather than the rule. But normal business, the operating cycle is consummated or finished in less than 1 year, probably several cycles in 1 year. Okay, so here are examples of your non-current assets. Investments. Okay, so let's take a look at investments. So when you say investments, okay, so these are, for example, uh, treasury bonds. Okay, there's a question that was asked by me by one of your classmates. Sir, what about treasury bonds? Okay, so remember, treasury bonds. These are treasury assets. These are the indebtedness of the government of a sovereign, which in our case is the Philippine government. So when the Philippine government borrows money, it's normally long term. Okay, so it's payable 5 years, 10 years, 15 years. So if you have excess asset, excess cash, what do? You invest. That's an example of your non-current asset investments. So you're familiar with property, plant, and equipment. Okay, deferred income taxes, these are just, for example, you've overpaid tax uh, to the government. Of course, the government will not um, refund you with cash. No. Okay, normally there's an extended period of time where you can offset your excess payment of taxes versus your tax payable. So again, longer than 1 year. Okay, so these are example of your property, plant, and equipment. Okay, so before we leave the asset section, okay, look at intangible assets. Okay, sometimes you call these other assets. These are your long-term rights and privileges of a non-physical nature acquired for use in business operation. So, for example, what are well, can you think, Jonalyn, of an intangible assets based on this definition? You have your long-term rights over that asset. Okay. Um, when you see a product and there's an apple, right? Okay, the apple sign. Okay, that's patented uh, by Apple, okay, by Apple company. That's their intangible asset. Meaning, if you see in a product an Apple logo, that means it's produced by Apple. Then you're probably thinking it's a quality product. That's why the prices of Apple product, when you compare it with other, uh, let's say, cell phones or laptops, is relatively higher because they have a premium over that. Okay, so those are example of your intangible asset. Now let's watch. Let me just stop sharing. Okay. Now let's watch a video, which is probably the third open questions. Okay. So let me share screen. Okay, this video is you can find this in your week four. Okay, week four materials. Okay, so this is a 1 minute and 10-second video. Okay, let me just pull up my screen. Okay, and share this one. So the question is, how does income statement, sorry, not income statement. Let me go to balance sheet. Give me just a second. Okay. So let me share screen. Then let's watch this video. So the question is, how does the balance sheet show the financial condition of the company? Okay. So let me share this screen. Okay, let's watch this. Sorry. Okay, let's watch this 1 minute video.
How does the balance sheet show the financial condition of the company? Many administrators and managers still do not appreciate the value of financial statements, and this is mostly because they do not know how to interpret such information. Financial statements, besides being the result of the operations that were carried out in the company, also inform us if these operations have been doing well. The balance sheet by itself is a document full of numbers, but it must be analyzed and interpreted. You can make decisions that benefit the organization. For example, through it you can detect if there is excess or insufficient cash in the bank, or investments, the amount of credit sales, a high inventory in warehouses, or if there are too many notes payable. These are simple visual interpretations of the balance sheet. But if you want a deeper analysis, you have to apply other techniques that provide answers to many of the questions you may have about a company's financial situation.
Okay. So again, if you look at that presentation, so for example, you look at the cash, okay, and you see there's excess cash, okay. So you can probably say to the company, oh, you can use this for further investments. Okay, so for example, inventories. You look at the inventories. There is oversupply of inventories, and the company has perishable inventories, meaning there's a expiration period for the inventory. So what happens? You tell the company you should reduce your inventory level because there is an expiration and you have accumulated a large number of inventory. Okay, so we will continue the discussion on the balance sheet. So we will be looking at the retained earnings or the owner's equity, which is essentially the activities of the owner plus the results of operation. And then we will have some sample computations. Okay, but I will be sharing this with you. In fact, I wanted to ask Jonalyn, did you receive the copy of the presentation materials that I've sent in the announcement? Okay, so you have the material. So you have there the sample presentation. And again, if you want to see actual financial statements, what can you do? You can type the name of the company. Okay, think of a large company, for example, uh, and then type it in Google, and then look at the website. And normally it's in the portion of about us. No? Okay. Now, if you want to see publicly listed company, okay, let me just share my screen again. If you want to see some information on publicly listed company, you have to go to, okay, let me share my screen. Okay, so you type PSE, sorry, on your browser. So you type pse.com.ph. Okay, so these are the publicly listed company in the Philippines. Okay, and then so you will now be going to the Philippine Stock Exchange, and then look at the listed company. Okay, so for example, you go to home, and then you can see here some of the listed companies. For example, here there's a listing of sorry, Figaro. Okay, so that's a listed company. You just type here. Okay, site search Figaro Coffee, and then you'll be able to see information on the company, including its financial statements. So these are also some of the companies. So you just click this, click that if you want to SM, for example. Okay, so that's the sample. Okay, so it's 7 o'clock already. Uh, last reminder, excuse me. Okay, sorry for that. Last reminder, please answer your, if you choose exam or activity mode, uh, just answer the exam, which is on a weekly basis. And then if your activity mode, you have your 4 assignments and 3 forums. Okay, so 3 forums that you need to submit, and also the open class questions. Okay. Uh, by the way, if you miss this lecture, you can view the recording of this. Okay. So if there's any, are there any question, Jonalyn, before we finish with our class for tonight? Okay. Thank you so much. So again, good night, and have a nice work week ahead. Thank you.